This is Paul Singh, the market speculator, with the trade report for September 19th, 2016, Monday. Big week this week with the Fed meeting. Results coming Wednesday at 2 p.m. Eastern and 11 a.m. Pacific. Basically, for the most part, except for the positions we're already in, we're kind of in uh, just kind of sit on our hands mode. We're not going to really do anything unless you're a day trader. The volatility is fantastic right now, but for swing trading, sometimes you got to know when to push it and when to stay back. We don't really have an edge right now because of what's happening Wednesday. We could get surprised. It's really difficult to game what's going to happen in the market. So what I've been doing is essentially lightening up during this period. So we've had a couple of trades. We've taken some nice profits, got stopped out of a couple of positions, and that was Buffalo Wild Wings and one more, which is escaping me right now. But we took profits on Friday on SOX L, which is the triple leverage semiconductor ETF. You can see we entered here on the big move Monday, and then we had this nice gain going into Friday. Used that as an opportunity to lighten up. Did the same thing with LABU. Again, entered Monday on this fantastic bullish engulfing candle right at the key moving averages. We got this nice 18% gain here. Ended up closing at 48.36. Went up over 50 today, but we got out around 49.40, I believe it was. So really nice gains here. Now, normally I would probably stick with these. These are still really nice setups. But again, I'm looking for a spot to get out. I only have till Wednesday, and if this were to pull back here, we wouldn't have time to make the next run. Normally, I'd be willing to wait for a week or two or longer here, but I can't do that right now. I basically want to be as close to flat as I can going into that meeting. I might still hold one or two positions. At the moment, I'm still holding oil, which I might even hold through the meeting here, depending. But where our stop is essentially, and I've loosened this stop. Actually, it initially was tighter, but now mid eights is where I'm holding oil. Twillo is after getting close to my stop is starting to bounce back. I like the fact that it's above the 9 here, and if it can make another run here, we'd probably take profits around 66 to 70. And this one I will hold through the Fed meeting most likely. It's an intraday announcement, so I don't have to worry about gap downs, and if it starts to go against me, I can get out pretty quickly. And then AMBA, which has been, as most semiconductors, doing really well here. Here was our entry, reversing an actual short here, but back up over the 9. We're looking for that next push. Not sure if I'm going to hold through the meeting at this point, but basically it's all about the meeting Wednesday right now. What is the decision going to be? And we have to be prepared for that. So no trades today, no trades tomorrow, and then Wednesday we will decide, and maybe not even to take a trade Thursday or Friday. But what I'm going to look at is for a clear indication that whatever the news is, whether it's an interest rate hike or we're standing pat, sometimes the move doesn't happen exactly as you would think. It could be a sell the news event. It could be that the language gets parsed later and we start to figure out they're actually planning something else later. So the thought process behind the initial move might change. So we'll take it carefully, but if we get a clear indication, then we'll start to get aggressive. And what we're looking for here, if we pull up SPY, key levels that we've talked about, and that is this range here, the bottom of this range, which actually corresponds with an open gap here, and a range that goes back about 2 years, and we're sitting right at that level. A breakdown here, so if they raised interest rates and we start to break down, I may aggressively start shorting at this point. Now, if there's a positive reaction, we don't raise interest rates, and we get up over the 50-day moving average, then I will probably get aggressive. And in the trade report, we're building those lists of aggressive stocks we're looking to trade and ETFs. And you've got a sneak peek into some of my favorites with semiconductors and biotech. Those have been leading over the last couple of weeks here. So those are two of the sectors I'd probably look to, along with that list of relative strength stocks that we're making right now, which is reserved for trade report members. And if you want to join the trade report, you can go to Swing Trade Alerts here. Put out a video every trading day, trade alerts, um, recap of the video, and what do we got going on here? Try it out for a month for $99, and if you want the yearly plan, it's 50% off. And then if you go into the swing alerts page here, you can see the video that was for today, a little recap here, our focus lists, which are a lot smaller than usual because we're so keyed into what's going on in the Fed. So it's all about Wednesday, and we'll make our decisions at that point. When I see you guys next time with the free weekly report, starting next week, we'll have a clear indication and we will review exactly how we're playing things going forward.